In the hyper-leveraged, state-directed arena of Chinese capitalism, the standard formula for amassing extreme wealth usually demands deep political lineage, family conglomerates, or an insatiable appetite for toxic debt. But the woman who would eventually command the most financially pristine property portfolio in Eastern Asia didn't start with a venture capital fund or a political appointment. She began her career with a metal wrench in her hand and printer's ink on her fingers. Her name is Wu Yajun, and she is the silent architect behind Longfor Group, the real estate matrix that rewrote the rules of Chinese urbanization. To truly calculate the structural velocity of this empire, we must run an immediate deep diagnostic on her primary metaphysical blueprint. Wu Yajun was born on February 1, 1964. When you break down those parameters into core data components, 02, 01, and 1964, and reduce them mathematically via our master matrix formula, month reduction equals 2, day reduction equals 1, year reduction equals 1 plus 9 plus 6 plus 4, which aggregates to 20, and 2 plus 0 reduces to 2. Combining the final nodes, 2 plus 1 plus 2 equals 5. The ledger reveals her true operating frequency, life path 5. In the language of foundational architecture, life path 5 is the code of the radical disruptor, the fluid pivot engine designed for absolute adaptivity, structural shapeshifting, and systemic environment reconstruction. While rigid operators build boxes and stay trapped inside them, a life path 5 studies the box, exploits its weaknesses, and exits before it collapses. Her 5 energy meant an intense psychological aversion to being cornered by a volatile market. From transitioning from an ink-stained reporter into a property queen, to quietly diverting her billions into Silicon Valley tech long before her domestic market imploded, her entire matrix was built on fluid navigation. She didn't build a monument to sit in. She built a highly agile liquidity machine designed to outrun the sovereign firewall. Long before she was dictating terms to institutional investors on the floor of the Hong Kong Stock Exchange, Wu was a low-profile metric technician at the Tianwei meter factory, earning a mere $16 a month. But her true leverage wasn't forged on the factory production line. It was unlocked when she transitioned into investigative journalism, spending 5 years documenting the raw, unregulated chaos of China's early urban housing boom. As a journalist, Wu didn't just write columns. She ran a comprehensive diagnostic on the systemic vulnerabilities of the retail property market. She cataloged the shoddy construction, the broken infrastructure, the complete lack of basic property management, and the furious consumers who were trapped inside a broken system. Armed with unparalleled, boots-on-the-ground intelligence from her days with a press credential, Wu realized that in a nation of 1.4 billion people migrating toward megacities, the ultimate commodity wasn't just poured concrete. It was execution, reliability, and quality control. In 1993, she pulled together a razor-thin pool of capital alongside her then-husband to launch Chongqing Longfor Properties. While rival startups were racing to replicate low-cost, high-turnover Soviet-style apartment block grids, Wu executed a premium-tier positioning strategy. Her earliest residential compounds in Western China were treated like hyper-manicured urban oases, engineered to feature superior ventilation, strict property management, and structural guarantees that simply did not exist elsewhere in the market. Longfor was no longer just selling apartments. They were selling entry into an exclusive tier of civil reliability. To secure exponential scale, you must first construct a localized trust fortress. Wu Yajun personally oversaw the precision parameters of Longfor's earliest builds. While competing contractors substituted cheap materials to inflate short-term margins, her teams focused strictly on structural longevity, aesthetic prestige, and advanced ventilation systems. This obsession with detail triggered a viral brand ecosystem. Word of mouth spread throughout Chongqing that a Longfor build was the ultimate asset shield against the structural degradation common in rapid city development. The company became the premier choice for middle-class consumers seeking safe luxury. setting up the framework to unlock massive commercial leverage. Residential compounds were merely the baseline layer of Wu Yajun's grand design. True to her Life Path 5 blueprint, she possessed a deep aversion to being single-source dependent on volatile residential homebuyers. To isolate her balance sheet, she deployed her true corporate masterpiece, the Paradise Walk Mega Mall Network. These weren't standard shopping centers designed to sit in suburban isolation. They were massive, transit-oriented commercial hubs built directly on top of primary subway lines and light rail junctions across China's emerging metropolitan cores. By integrating high-end retail malls, office high-rises, and major transportation infrastructure into a singular, self-sustaining loop, Wu locked in a predictable, high-margin stream of rental income. This network of recurring commercial rent acted as an unyielding liquidity cushion, generating continuous capital even when macro housing sales cooled down. By 2009, the scale of Wu Yajun's commercial and residential empire could no longer be contained within localized private balances. It required access to international capital pipelines. Longfor Group executed its initial public offering on the Hong Kong Stock Exchange, pricing under ticker HKSE 00960. The public markets went absolutely feral for the stock. Global institutional investors recognized that while other Chinese property developers were dangerously over-leveraged, Longfor's combination of premium residential builds and steady commercial mall revenue was a pristine outlier. The IPO catapulted Wu Yajun straight into the global financial elite. With her equity value climbing exponentially, she was officially crowned the richest self-made woman on Earth. The blueprint sketched by an ink-stained reporter had officially transformed into an unassailable financial empire. In the upper echelons of corporate empire building, a founder's greatest vulnerability isn't always a predatory short seller or a shifting economic cycle. Sometimes, the threat originates from within the primary foundational ledger. In 2012, at the absolute height of her real estate supremacy, Wu Yajun faced an internal structural crisis: the dissolution of her marriage to Longfor co-founder Kai Kui. In standard corporate structures, a multi-billion-dollar divorce is an absolute extinction-level event for a company's stock price. It typically triggers aggressive margin calls, forced block sales of shares, and paralyzing board squabbles that can alienate institutional investors overnight. But Wu handled the split with clinical defensive precision. To protect the company's market capitalization from a public bloodbath, she engineered a highly sophisticated, ironclad asset division. She transferred a massive 30% stake in Longfor directly to Kai Kui, instantly making her ex-husband a standalone billionaire. Crucially, she retained absolute, undiluted voting control over those shares via a strict legal proxy agreement. Though her personal net worth was instantly cut down, she successfully isolated the corporate entity from the fallout. The market breathed a sigh of relief. The paper queen had survived her first massive equity split, keeping her hands firmly on the levers of the Longfor machine. From 2013 to 2020, the Chinese real estate landscape transformed into a hyper-leveraged casino. The central credit system kept the interest rates low, and developers gorged themselves on high-yield offshore dollar bonds to acquire massive land banks they could barely afford. Giants like Evergrande and Country Garden were praised by Wall Street for their exponential expansion, building entire cities on an unbroken carousel of refinancing. If old debt came due, they simply issued larger, more expensive bonds to clear the balance sheet. Wu Yajun flatly refused to play the game of hyper-leveraged speculation. She maintained a strict, conservative balance sheet, enforcing rigid debt caps and ensuring that every single project was backed by real operational cash flows rather than speculative credit lines. For 7 years, Wall Street analysts critiqued her for being too safe, too slow, and too defensive. But Wu wasn't building for short-term stock pumps. She was fortifying a citadel. Defensive stability requires an ironclad alliance with the gatekeepers of sovereign liquidity. By avoiding high-risk offshore junk bonds, Wu engineered an elite capital network within traditional state banking systems. Tier 1 institutional lenders categorized Longfor as an elite counterparty. This rating unlocked access to premium lines of credit with lower interest rates than those available to more aggressive, overextended property developers. While rival firms scrambled to clear basic debt covenants with punitive offshore bondholder terms, Wu's operation sat comfortably on secure capital runways. This access to institutional trust became an essential armor block, insulating the engine long before regulatory currents completely changed the environment. As macroeconomic indicators began signaling an inevitable tightening of state control, the corporate playbook required absolute foresight. Wu Yajun did not wait for the regulatory hammer to drop. Longfor developed an internal risk modeling mainframe that simulated various levels of stress across their liquid capital pools. While other firms falsified metrics or buried liability accounts in obscure subsidiaries, Longfor's reporting to state banking auditors remained exceptionally transparent. This systematic compliance created a bulletproof track record with regional lenders. When local authorities began quietly testing banking system liquidity with preliminary localized capital caps, Longfor easily cleared the gates. By maintaining this structural green zone, Wu ensured her operational pipelines remained completely open while her direct competitors were already setting themselves up for institutional execution. In August 2020, the central state decided to permanently break the wheel of unmitigated developer leverage. The central government handed down an uncompromising regulatory directive known as the 3 red lines. The parameters were absolute and mathematical: a liability-to-asset ratio under 70%, a net gearing ratio under 100%, and cash-to-short-term debt that had to match at least 1-to-1. If a developer stepped over even a single line, the banking system would lock down their ability to issue fresh debt. Overnight, the credit punch bowl was shattered. Mega developers that had spent a decade running on continuous refinancing found their liquidity completely cut off. Iconic corporate giants instantly began spiraling into historic defaults and bankruptcy. Yet, as the rest of the sector burned, Longfor stood out as a green zone. Thanks to Wu Yajun's conservative fiscal management, Longfor was one of the very few private developers to cleanly pass all 3 regulatory tests. Her fortress looked entirely bulletproof. But in a systemic, countrywide real estate panic, logic is the very first casualty. By early 2022, the complete operational paralysis of rival giants had triggered an absolute psychological contagion across the global financial markets. Panicked homebuyers across China stopped paying mortgages on half-finished projects managed by insolvent developers. New apartment sales plummeted to historic lows, and global investment funds initiated an indiscriminate, algorithmic sell-off of all Chinese real estate equities. Longfor's pristine balance sheet could no longer insulate it from the pure gravity of macroeconomic fear. International short sellers targeted the stock, circulating unverified rumors of off-balance sheet joint ventures and hidden debt obligations. The corporate matrix was holding its financial lines, but the value of the paper empire was bleeding out purely by association. Then came the ultimate exhibition of LifePath 5 energy, unsentimental detachment, and the rapid deployment of a tactical escape hatch. When an environment shifts from highly profitable to critically hostile, A5 does not sink with the burning ship, they step aside. On October 28, 2022, in the absolute dead of night, Longfor issued an emergency regulatory filing. Wu Yajun abruptly stepped down as chairperson, citing age and health reasons. She refused to spend her liquidity fighting a reactive, losing PR war with short sellers. The timing triggered immediate market madness. The following morning, Longfor's stock cratered by 40% in a single trading session. Vapor billions of dollars of paper wealth in a matter of hours. International capital lines panicked, assuming she was abandoning a sinking ship, but Wu had already cleared the blast radius. She cleanly handed the corporate steering wheel over to professional managers and exited the hot zone, leaving her overextended billionaire rivals to face state restructuring. While the public market was busy panicking over real estate stock charts, a highly sophisticated liquidity hedge was already operating quietly in the background, another masterful maneuver driven by her Fluid 5 blueprint. Long before the domestic concrete empire faced structural headwinds, Wu Yajun had established her private family office, Wu Capital. She understood that true financial insulation requires decoupling from your primary sector. Wu Capital systematically directed massive tranches of liquidity away from Asian property markets and quietly injected them straight into premier global technology frameworks. By acting as an early, stealth backer for high-velocity Western tech platforms like Uber and Evernote, Wu transformed her concrete-tied wealth into a hyperfluid digital ledger. When the real estate matrix began to bleed capital, her diversified technological fortress was already safely positioned far beyond the reach of localized market fires. True masters of structural finance understand that survival means accepting a smaller footprint in exchange for preservation. Longfor did not fight the state-directed realignment. They streamlined into it. Under professional management, the firm pivoted away from speculative land acquisition entirely, shifting its operational engine toward property management services, commercial property maintenance, and infrastructure operations. This step downscaled their peak capital potential, but permanently stabilized the core machinery. While overextended competitors faced total asset dissolution, the Longfor apparatus adjusted to the new macro landscape, surviving as a smaller, highly optimized service network. Today, the grand real estate matrix that once defined China's economic ascent has permanently adjusted to a new reality. Longfor Group managed to survive the absolute worst of the systemic credit crunch, outlasting almost all of its private peers. But survival came at a devastating cost. The vast, endless landscape of highly priced concrete developments has permanently cooled down. Wu Yajun's personal net worth, which once peaked at an astronomical $18.3 billion, has experienced a dramatic structural correction, stabilizing at a fraction of its former glory. Wu Yajun didn't end up in a federal prison cell like Silicon Valley's tech mirages, nor did she vanish into the night like China's backroom political billionaires. She executed a tactical, quiet retreat. But her story remains the ultimate cautionary tale of the modern economic era. It is a vivid reminder that when you build an empire out of paper wealth and state-directed credit, the very system that granted you your multi-billion-dollar crown can rewrite the financial laws of physics and take it all back with a single stroke of a pen. Life path. Number 5 represents the adventurer and the freedom seeker. Wu Yajun's ultimate life lesson is to discover freedom through mastery and experience, rather than just avoiding constraints. She are naturally curious, adaptable, sociable, and she loathe routine. Because Wu Yajun are versatile and a big-picture thinker, she thrive in fast-paced environments. Wu Yajun are ideally suited for careers that offer flexibility and allow her to interact with diverse groups of people. Wu Yajun most compatible life path numbers, best with life path 1, 3, 5, and 7. These numbers share your love for adventure, communication, and personal freedom. Least compatible numbers. She will struggle with life path 2 or 4, as their need for deep stability, routine, and predictability can feel restrictive to Wu Yajun's free spirit. Remember the golden rule of our master calculations. If you owe the bank $100, that's your problem. If you owe the bank $100 million, that's the bank's problem. But if you fake a $60 million German trust fund to pickpocket Wall Street lawyers, well, that's just called a highly creative, zero liquidity branding strategy with a permanent ankle monitor upgrade. The simulation is over, the check is declined, and the Master 22 Builder Protocol 074 is now closed. Billionaire by numbers.